Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. And in this video, I'm going to go into a bit more detail about term life insurance. Now, in the first video in this three-part mini-series, I gave you a quick overview of all the different types of life insurance in the market. And in this video, we're going to focus on term insurance. Now, as a reminder, term insurance is the type of life insurance that pays out a death benefit if you die during a specific period of time, but if you outlive it, you don't get a death benefit payout. And the reason why term insurance can often be a great choice for people who are looking to address the risk that they die young is that term insurance is way less expensive than permanent life insurance. It varies a bit based on somebody's age and their health, but in general, if you assume that permanent insurance is going to be 5 to 10 times as expensive as term insurance for anyone under the age of 60, then that will often get you in the ballpark of what it is. And we're always happy to help you understand what it would be for you, but that gives you a sense of the order of magnitude. Now, one of the reasons why people end up in permanent life insurance policies when they should have ended up in term is a sales line that we often hear ensnare people who got insurance elsewhere before coming to us. And that is, why rent when you can buy? And that could not be any worse advice, because the reality is that the insurance company is not dumb. In fact, it's quite smart. It is not lost on the insurance company that the odds of you dying during a certain number of years are lower, much lower than the odds of you dying ever. Like, this fact is not lost on the insurance company. You are not exploiting some sort of opportunity in the market the insurance company hasn't noticed by buying permanent life insurance. Now, permanent life insurance can still be a great choice for certain goals and people in certain situations, but it's not because insurance companies don't know how to price the difference between term and permanent life insurance. So don't let anyone ever sell you on that. Term life insurance is way cheaper because, frankly, term life insurance is priced with the expectation that most people who buy term insurance and can qualify for a certain level of pricing on that coverage, most of them are going to outlive it. The death benefit is expected to only be paid to the unlucky few who don't outlive the term. And that is how the product is designed. If you have term insurance, it's a little bit like when you buy homeowners insurance or auto insurance, right? You don't sign up for auto insurance the next year and think, oh man, like, I really wish that my car just gotten totaled because then I would have gotten something out of this policy. Or, oh man, I wish something had fallen on the roof of my house and then I would have gotten something out of this policy. No, quite the opposite. You and the insurance company would both hope that life is easy and things work out in a way that's comfortable and optimal for you, which is not having your car totaled, not having a tree fall on your house, and not dying prematurely. But the insurance is in place if you end up being among the unlucky few who don't have that outcome. Now, in terms of things to look out for with term insurance, all the term policies that you'll see quoted at aboveboardfinancial.com are level term policies. We also have access to annual renewable term, but we're generally not fans of it because the pricing is usually not attractive when compared to level term. And in fact, we see a lot of annual renewable term that's been sold elsewhere, and we often help people fix those insurance situations and save a lot of money. Now, with level term, all that says, or all that means, is that the price of the insurance coverage cannot change for the duration of the level term. So when you see 20-year term policies quoted, it means the price is fixed for 20 years. If you see 30-year policies quoted, it's fixed for 30 years. Now, that doesn't mean that you have to pay for the full 20 or 30 years. What I often say to people is that you can think of term life insurance as a bit like a Netflix subscription, where if you want to cancel it and just be done, you can do that. There's no penalty. You're just done. That's different from when you cancel a permanent life insurance policy, where it often results in a loss of money. Not always, but oftentimes. So that's why we're really careful with permanent about making sure that it truly is a great long-term fit for a client. Now, with annual renewable term, the thing that really gets people is that they often don't fully appreciate how much the premiums are going to go up. And this is an example from an actual client who came to us having gotten an annual renewable policy a few years before. And we laid out the difference between annual renewable and term. Now, it's not always quite this egregious, but the conclusion is generally the same, which is that the person would have been better off with level term. And this shows how the blue line, which is annual renewable term, goes up in price every year. As the person gets older, the premiums increase. With this individual, we could have put them into a 20-year level term policy, that even started at the same price as their annual renewable term with no future increase. And the cumulative results of this over time are really significant. If the person had wanted $2 million of their annual renewable term coverage for all 20 years, they'd spend over $60,000. They would get the same benefit and only have to lay out $22,500 if they went with level term. And so that's why it's really important to make sure that you're aware of what's in the market and what's available to you and end up with a policy that truly is the right tool for the job. So come visit us at aboveboardfinancial.com to learn more about your insurance options, or drop us a note at hello@aboveboardfinancial.com and we can help you get started.